Hello, everyone, and welcome to the National Inventor Club. Now we have the next part with Adam and Jacqueline. All right, let's have Jackie and Adam. Hello, welcome to National Inventor Club. You've been behind in the studio here in the green room for quite some time, but you're very important to us. We are spending money on our inventions. We are working on prototypes and patent attorneys and engineers and memberships and everything else that's going on. So if you can please introduce yourselves and let's get right into it. I know that there are people that are excited and waiting to hear what we can write off as inventors.
That is, I don't believe for a second that people are excited to hear from the tax people.
You're not the tax man. You're the ones that help us, right? So Adam, you're an attorney, and yep. Jackie is a CPA, and you're both related. I see the same last name.
Yep, we're about 2 hours apart right now, but we've been married for 17 years.
Be careful.
Good job.
All right, are my slides showing up here?
I'm going to put that right up here for us.
There we go. Cool. So I do want to jump into this, and I do want to compress this a little bit from how we normally do it, just given the time that it is right now. Like the last presenter, super boring topic. We try and make this entertaining and educational. And in fact, we're going to have a URL and a QR code later so that people can download some free resources on this, because we're not going to be able to cover everything that we want to in this. So it's great to be here on your official tax day. I think that was a brilliant play on that. And I'll tell you a little bit later on about why Jackie and I started this business, but she's the CPA. I'm a lawyer. I also have my MBA. I went to college for 7.5 years. I've taken intro to accounting 3 times. And the third time that I took it, I got a B-. So I married into that brilliance. And if there's one thing I love more than lawyer jokes, it's tax and accounting jokes. Love the one about learning about parallelograms in high school. We have a 7th grader who's learning geometry right now, and it's our job to teach him about taxes. So we are targeting this towards inventors, because that's our audience today. So if you have questions about accounting, taxes, bookkeeping, if you're like me and you're not a numbers person, we're going to try and explain this to you as efficiently as possible. And if you're interested in avoiding mistakes now so that you don't have to deal with them in the future. So you don't want some joint venture, some licensing arrangement, some acquisition, whatever, to get jammed up because your tax house isn't in order. That's why we're here today. So Jackie, the CPA, give us the basics of accounting.
Okay, so obviously, I'm sure you've heard revenue is what you want to come in, right? You have revenue, but generally you need expenses to generate the revenue. So what we have revenue, less expenses gets us the profit. And in order to make more money, we either need to increase our revenue or decrease our expenses to get more profit. The sad part is that taxes, in most cases, aren't in that expenses number. They're after the fact. So they're going to eat into your profit. So let's get ready to not have any surprises.
So that's, again, we're starting at absolute base level here. So let's start adding layers to this.
Yeah. So to continue into accounting 101, there are basic financial statements, right? So what we just talked about is the heart of the income statement, otherwise known as your profit and loss statement. So those are used interchangeably. If you hear people say that or P&L, that's your income statement. And then the other normally big statement is the third bullet there. That's your balance sheet. That's going to show your financial position at any point in time. Assets minus liabilities equals your equity. And so that is going to show your financial position. And then the cash flow statement normally is the dance between the two, the bridge between the two. If you have an income statement on accrual, that's getting into like further down the line. But
skip ahead.
Yeah. Anyway, that's important because even if you have, you need to know how much cash you have so that you can cover your expenses. So when the spark hits you, what do you do? How are you going to account for it? Can you do it on your own? When do you need an accountant? And what kind of accountant do you need and when? We're going to go over that.
So this is my favorite slide. Oh man, my beautiful formatting on this one didn't come through. Jackie and I literally spent way too much time formatting this slide. But what a lot of people don't understand about accountants is they're not all the same, right? They're not all as beautiful and charming as Jackie is. But they also do different things. So you will see in business groups, hey, I need a recommendation for an accountant. And unless the person answering that question says, well, what type of accountant are you looking for? They're probably going to give you bad advice. So we're going to break down these 5 different categories today of what these different types of accountants do so that you have a little better understanding of what your needs are. And this is built as a pyramid. So we start with the first layer of the bookkeeper. Your next level is payroll. Your next level after that is tax prep, which we're all familiar with after yesterday. There's a layer of what are called managerial accountants, and we'll explain that briefly. And then on the top there, you have your tax strategist, which again, my formatting kind of fell apart here. So I think at this point, it's probably worth taking a second just to tell you about us and this business. So I am a lawyer. I own a law firm. We help small businesses and entrepreneurs. We are based in Erie, Pennsylvania, which is literally the least entrepreneurial city in America. Like they track those statistics. And if you leave the front door of our office and go 2 blocks east, it's the poorest zip code in America. But we are running a multi-million-dollar law firm that, like John Rivsey, will be on the Inc. 5000 list later this year. We were just on the Inc. regionals. John and I are friends. He's a fantastic patent attorney. We refer all of our clients to him for that. I didn't even think it was possible for law firms to make the Inc. 5000 list. And then I saw John and a couple other friends of mine do that, and they gave me the belief. So our business is really, really successful. It provides a wonderful, fantastic living for me and Jackie. But here's what happened recently, and this was this was about 2 years ago, is our tax preparer, again, on the layer of accountants there, he filed our taxes and he said, what do you think you're going to make next year? And I told him the number, and it was a significant number in the 7 figures. And his only response was, wow, that's great. Here's the quarterly tax payments that you should make to the IRS. And if I had taken his advice without questioning it and without implementing some of the strategies that we're going to teach you here, we would have ended up sending $700,000 to the IRS before tax day. Those were our estimates on the income tax we had to pay. By implementing these strategies and doing some really cool stuff that we're not even going to talk about today, like I got to buy a race car, we reduced our bill to $450,000. So we saved $250,000 in 1 year doing some of this stuff and frankly, not getting super aggressive with it. So a lot of accountants will tell you when you make money, congratulations, the price you pay for your success and your income is you have a higher tax bill. We don't believe that. I am here to help defund the IRS. Jackie's here to help put more money in the pockets of entrepreneurs, but we're both doing it the same way. Now, part of the reason that our firm is successful is because in 2019, Jackie quit her job and came and worked with us. So Jackie, give us a little bit of your background so they understand who's teaching them today.
Sure. So I started my career at a Big Four accounting firm in Pennsylvania, and I did actually financial statement audits for big companies, for publicly traded companies, and went from there, went to work on accounting policy in a big bank. So I'm familiar with taking positions on policy and documenting the heck out of it. And that is why I have found a lot of passion in what I do in terms of tax strategy. But I wasn't always a tax strategist, and I always wasn't playing in the strategy. And that will kind of lead into our next slide of the first type of bookkeeper, or first type of accountant, which is bookkeeper.
So we're back to our pyramid and building the layers. If you don't have a bookkeeper, you can ignore everything else that we're going to teach you today. This is where you need to start. Go
right. So if you're just starting out, if you literally, you aren't investing that much, you could probably do it in a spreadsheet yourself. Keep it simple, keep it timely, make sure you're putting everything in a spreadsheet, keep it separate, put it in a bank account, and keep all of your receipts. And then when you start to realize you could be doing better things in your business, or you're not doing any of those things, it's probably best to hire a bookkeeper. And this bookkeeper, the only thing they're going to do is track your historical stuff. This is what financial accountants do. These are the people that put together financial statements. They track your information. They're historical, but it's good to have good historical information. But they're not going to help you with the taxes. We'll get into more people from there.
And Jackie and I are firm believers in hiring experts to do things for you. Bookkeeping is a great example of that. To hire a competent bookkeeper who, when you get to the level where you've got QuickBooks or some other accounting software, these people are experts at setting that up, and they're experts at maintaining it, and they can do it so much faster and so much better than you can at, frankly, really, really, really low rates that you could go out and be improving your inventions or inventing new stuff for growing your business.
And we're talking about also from the beginning, where we're actually just starting off and starting to spend money out of our pockets, whether it's through a corporation or out of our own pockets, just to keep track of the activity of what we're spending on.
Yes, and any of us who have started a business, because I'm a quick start, right? We're going back March 31st, flipping through the bank accounts, trying to figure out where we spent money for these things. We're telling you up front, start tracking this stuff properly. And we're going to talk on a later slide about some of the common deductions, because we know for a lot of new businesses, they've got more expenses than they have revenue. They're showing losses in the beginning, and there's advantages to that. So the next layer of the pyramid, Jackie, your payroll provider, go for it.
Right. So your bookkeeper is not necessarily going to do your payroll. And frankly, I would recommend outsourcing it to a payroll specialist. They'll be on top of all the laws. You'll make sure that your tax returns are handled correctly. So look for a payroll accountant when you start to need payroll services.
Most of the time, as we're just starting off, where there's many inventors, I see them on here that are just starting off. Most likely, if we're going to hire some help, we may not necessarily hire them within our company. We may outsource or freelance.
So we're going to share two examples later of why you may want to put yourself on payroll. And there's one other really good strategy to help keep money in the family and save money on taxes. All right.
Going back to that, if you are going to outsource it, and if you aren't going through an agency, so you need to 1099 these folks, I would still look into a payroll type provider, because or services like Gusto, for example, you can 1099 your contractors through there, pay them through there, and 1099 them through there, so you don't have that headache.
We pay a lot of people through our payroll software, and then it automatically sends them the 1099s, which is a compliance thing. So that's really great. Okay, third layer of accountants. We're getting more complex. Is your tax preparer. And I think this is what most people think of when they think of an accountant. Who files my taxes for me? Here's the problem with tax preparers. Most of them are CPAs. Their job is to put the right answer on a piece of paper and file it with the government. This is local, state, federal. The P in certified public accountant, CPA, it stands for public, meaning their obligation is to protect the public from you as the business owner, to make sure the IRS gets the answers that are favorable to the IRS to protect the public. So your tax preparer is typically not an advocate for you. Instead, they're filling out the forms to get the right answer and not necessarily the best answer. So two things I want to cover on this slide. The first thing is, I saw there was a question on one of the live streams about sales tax. If you're selling physical products, or in some cases digital products, the easiest way to handle sales tax if you're selling online is to use some sort of, there we go. So the question popped up there. Use some sort of e-commerce platform that handles the tax compliance for you. It used to be only if you were located in a physical state would you have to collect and pay sales tax. They changed that law because Amazon had such an unfair advantage. That's only a couple of years old. So if you're using a platform that you're selling online, let them handle the sales tax for you, or work with a tax preparer who can handle your sales tax obligations. But basically, any state into which you're selling, you may need to think about filing sales tax. But sales tax is the responsibility of the retailer, so whoever is ultimately selling it to the consumer. So if you wholesale and you sell to a retailer who then sells to the consumer, it's their problem. They got to worry about it. So
But if we have our own website, Adam, and we're selling direct, most of the time we have PayPal merchant or Stripe merchant, and it has automatic ways for them to collect the sales tax, but that's on us.
And you'll have to remit it. But something like Shopify, I think, will actually do some of the returns for you. So if you're looking at selling physical products, and Jackie started her career in a Big Four firm, so did I, and I worked in the state and local tax group. So we worried about Nexus in all these different states, it's called. Look into software. If you're selling direct to consumer, look for software or a service that will handle that for you. Okay, second thing on tax prep. If you filed your taxes yesterday, or if you filed or if you're on extension but you have your 2022 taxes filed, I want you to do me a favor after this presentation. If you've got your notebook out, write this down. Go find your Form 1040. This is your individual income tax return. And on page 2, right towards the top, there's line 24. That is your total tax. That's how much tax you paid to the federal government. It's not the check that you wrote on April 15th, because you may have had estimates and quarterlies and withholding that you paid throughout the year. But I want you to look at line 24, because chances are if you make any real amount of money, you look at that line and you're immediately going to want to call my tax strategy business. So do that favor for me after this so you have an understanding of exactly how much tax you pay. Okay, managerial accountants, I want to go over quickly just because we don't have a ton of time. These aren't tax forms. These aren't compliance things. This is helping you run your business. Your managerial accountant, your CFO, can help you make budgets, can help you make projections, can help run a report of variance between here's what we budgeted and planned and here's what actually happened. They can track KPIs or key performance indicators for your employees. So in our law firm, we track billable hours. In the tax strategy business, we track leads and sales consultations. Our controller, who's our managerial accountant, helps us with that with Jackie's help. They can help with goal setting. They can help with modeling. So if you're calculating your cost of goods for an item that you're going to sell, a managerial accountant can help with that. Or you may be doing a lot of that on your own if you really like spreadsheets. Your managerial accountant should be able to give you an estimate of how much money you'll make this year. It's going to change. It's not going to be accurate, but at least they should be helping you go through that thought process of what you expect your revenue to be and what you expect your expenses to be. All right, that's it on managerial accounts. So our slide on what you can write off, Jackie, let's run through some of these things. So doesn't matter the stage of business you are, you got an invention. What's the rule and what type of stuff can we deduct on our taxes to reduce our income?
Right. So you can write off business expenses, and business expenses are defined as anything that is deemed ordinary and necessary in the tax code. Now, there's a lot of cases back and forth about what exactly those terms mean, but
there's also a lot of really bad advice on the internet about what those words mean.
So we could get into that, but basically, if you can demonstrate that you're using it in a reasonable way to support the building of your business, it's an ordinary and necessary expense to move forward, it makes sense. So we're talking about any of your marketing costs, any shipping, any, payments that are made to your employees or you're made to contractors. This includes the experts that Alex was telling you to hire. Those are all deductible. So if you ever think about, oh my gosh, I don't know, you're going to be able to deduct it. And it's okay to go into a loss position on your taxes. So that's a whole nother discussion.
So you're talking, Jackie, you're talking patent filings, maintenance fees.
Yes.
Marketing, advertising for, let's say we're advertising on Amazon or Google AdWords.
Absolutely.
Engineers, designers, whatever it is, people that whatever you're putting money in towards, whether you're incorporated or you're not incorporated, to keep track of all your expenses, because there are different ways of filing.
Yes. So, and now, just because you can write it off doesn't mean they're all 100%. Like your meals, for example, if you have certain meals. In certain cases, it can be deducted at 50%. In some cases, it's 100%. We can get into nuances of every different type. This slide shows some examples, but also, if you belong to organizations to learn more, your continuing education, anything that is helping you move forward, if you have you can clearly demonstrate that it has a business purpose.
And Jackie also, and Adam, many people are either working from home. This is a side hustle, as somebody mentioned earlier. It's something that we want to take as our idea and possibly convert into our full-time job at some point. But a lot of us are working from home. So that also, I see you have rent. So we're going to get into
the home office. So let's jump ahead just for the sake of time here.
Excellent.
So in order to know whether you have a tax let me skip. I went there.
What happened there?
I'm just skipping it. This was one of our vendors bought this as a gift, and they sent a photographer and paints and brushes, and Jackie and I and our kids completely. It was fun. Anyway.
Nice.
Okay. So the question is, well, maybe I have a tax strategist. I've got my tax guy, right? Here are the questions to ask. Are you asking for tax strategy help? Are you asking for strategies to implement? Do you meet with this person regularly? If you're meeting with them between January 1st and April 15th, and that's it, you probably don't have a tax strategist. If they talk about their favorite strategies, mine is the Augusta rule, which is really fun because of the Masters golf tournament that just happened. It's in the free guide that we're going to give out. It's not in this slide deck, but that's my favorite. If they talk about red flags for certain things, you probably don't have a tax strategist. And if they talk about having the right answers instead of the best answers, you probably just have a tax preparer, not a tax strategist. If you have lots of documentation, you probably have a good strategist on your side. So we've got our business that helps business owners account for expenses properly to reduce their tax bill and keep more of the money that they already make. Pennywise, which is a relatively new business, we've already helped business owners either save or get as refunds $75 million. And when we worked at Big Four accounting firms, that could be one client that gets $75 million. This business, these are mom and pop, small businesses, single shareholder type businesses that we're putting this money back into their pockets to do whatever they want to.
Okay. All right.
So we talked a little bit earlier. We talked about entity selection. I'm going to oversimplify this as much as possible because it's going to be a little bit different for everybody. But if you are a sole proprietor, if you're not incorporated and you have an adjusted gross income of about $250,000, you will pay $45,558 in taxes at the federal level. If you're properly set up as an LLC, which makes the S-Corp election, which we talked about earlier, and you put yourself on salary, you put yourself on payroll, you will reduce your tax bill to $33,744. So your choice of entity, if properly structured, could save you almost $12,000 a year. Now, not everybody's going to run with these numbers and it's not going to work for everybody, but this is an example of how impactful that one decision can be. How are you going to set up your entity and what is the tax selection that you're going to make? In an instance like this, it can save you $12,000. So
and don't just set it and forget it. This is something to revisit too as you grow.
Yep.
Okay.
All right, Jackie, can you quickly go through business travel? Because this is a really fun way to combine ordinary and necessary business expenses with stuff we want to do as business owners.
Right. So kind of just at a high level, basically any business travel, if you're going right to and from the trip, all of that's write-offable, right? So if you're going to, you're going right to the conference and not doing anything else. But there are some benefits that if you extended your trip, if you organize it the right way, you can get a little bit of, personal R&R time in there with it. And there's also things to think of, other reasons to travel that could work for this. So if there are, if there's not, maybe it's not a conference you have to be at, but maybe it's something that will improve your customer experience or something, and you go learn how to become a better customer-facing you and your sales team or something. Those are all things that if you can document the business purpose, get a little more creative with your travel.
So in this example, we use the example of seminars. We do a lot of seminars. So like if you had a seminar that was Wednesday, Thursday, Friday, which is days 6 through 8, in this example, you could actually leave on a Friday morning and stay until the following Tuesday afternoon, 12 days later. The only work days are that Wednesday, Thursday, Friday, and you can write off your flights, hotel, meals, and other incidentals for the entire trip.
All right, this is interesting.
Yeah.
This is super cool. And again, in the guide that we have, Bill Gates uses this strategy for what he calls think weeks, which is brilliant for inventors. He flies out to some remote cabin, invents the internet, and writes off the whole trip, right? Now there's documentation that you got to do and a lot of that stuff, but it's a way to, we go to seminars in Orlando. Well, we usually tack on a Disney trip because our 6-year-old thinks she's a princess, right?
Okay.
So we're able to deduct most of that trip for somewhere that we were going anyway because of the business.
Yeah.
Right. Let's see if we can. Okay,
yeah, when we say most, there's obviously things
Yeah.
to make it a little more. And international travel, as long as business is 75%, you could do it that way too. But
okay, so let's talk about your home office. If you are a sole proprietor, you can deduct expenses for your home office, and you use this Form 8829 to do that. And if you go and Google IRS Form 8829, it's pretty self-explanatory. Don't file it on your own, but you'll at least see the questions that they ask. If you are an S corporation, which many of our clients are LLCs who make an S corporation election. We do actually work with some C corporations too, because they're not just for massive companies. There can be some good strategies for some 7-figure earners, for example. If you are an S corporation, if you have a tax preparer who doesn't understand tax strategy, that person will tell you you cannot take a home office deduction if you're an S corporation. And that person is technically correct, but they are creatively inadequate because there's what's called a home office reimbursement. So I am sitting in my home office right now, and there's a certain square footage of this room in our entire house that I can write off that, or I can get reimbursed. Adam Williams can get reimbursed from the company for my mortgage interest or rent, real estate taxes, insurance, repairs, maintenance, utilities. Our domestic staff in our home is a 6-figure expense to us every year. And a portion of that, the business will reimburse me for. And that's an expense to the business. So that can be so even if it's not a direct deduction, we can take some of those expenses and the business can reimburse me for it, which becomes a deduction. There's a lot of calculations that you can do on this. It's a fraction where your area for your business is divided by the total area of the home, but you deduct things like hallways and bathrooms and mechanical rooms and stuff like that. So you can really kind of inflate that number a little bit, or you can oversimplify it, and the IRS allows you to just say, hey, take your square footage and $5 per square foot, and that's your deduction if you wanted to do it that way.
If I could just pause for 1 second, because there are some people that are asking, just so you know, as soon as the meeting is done, we will move into the after meeting networking. So if you're watching, yes, if you're in the app, you'll see that we're done, and then we'll let you know to go into the after meeting networking link. And Adam and Jackie, you'll be able to join us if you have a few minutes. That would be great.
We'll do what we can there. Okay,
Great.
so let me skip ahead and then we'll come back to this. For the people that do have to bounce out of here, we've got a guide. It's 7 strategies to take to your tax preparer. Hit the QR code or go to pennywise.tax/save. Put in your email address. We will send this to you. Go and meet with your accountant and show them, hey, can I use any of these strategies? And one of 2 things will happen. And either case, you send me a fruit basket, right? Either they say, oh yeah, I already do all of this stuff for you. And what I have just done for you, what Jackie and I have just done, is showed that you have a good tax preparer, tax strategist. You're welcome. Or you're going to show them this guide and they're going to go, oh, no, none of this applies to you. This will raise red flags. None of this is right. We can't do any of that. In which case you're going to want to send us a fruit basket and thank us because we just showed you that your accountant is ruining your life.
Okay.
So pennywise.tax/save free guide. All right. Now let's talk about R&D expenses, because this is super, super important for what you guys are doing. There are 2 pieces to research and development and the tax benefits to it. Okay. It's kind of a hot topic right now too, because there's some pending legislation that will change this. There are, and I'm going to oversimplify it just for the sake of time. If you spend money inventing your thing on experimentation, on prototyping, on figuring out whether the thing is going to work, the IRS currently, right now, says you can't write all that off in 1 year. They say you have to spread it out over 5 years, which sucks. But it used to be 1 year, and they may be bringing that back. So there's some pending legislation, and there's a lot of really big companies that care very much about that. So if that law changes, it may actually be retroactive, which would help you for 2023 if you incurred expenses too. But we're keeping a close eye on this and updating our list about it, because that'll be a big deal. If you're incurring expenses now, you want to be able to take those losses now.
Okay.
But there's another benefit for research and development that's a tax credit. This is not a deduction. A deduction reduces your income, which eventually reduces your tax bill. A credit directly reduces your tax bill. So every dollar of a credit that you get, that's $1 less in taxes that you have to pay. And there's a research and development credit that Jackie's going to talk about that actually allows you to look back a year. So if you had income last year and you get the credit this year, you can offset it. Or you can get the credit now and use it against your taxes for the next 20 years. So if you're a long way off from profitability and positive cash flow, this is really important. You know what I'm going to do, Jackie? Just because it's almost 9:30, I'm going to leave this slide up here. I know everybody wants to get to the networking, but basically, if you spend a whole bunch of money on researching and trying to figure out your product, you can claim this credit. Got it?
Yeah.
Great info. There's a lot of people commenting here. Great information. Thank you for all this. This is great. Even John and people are kind of calling people out to take this information away. And what's great is that it'll be recorded. People can always listen to this, and as they're building their business and before tax season or tax day next time, they'll be able to. You should be planning next year's taxes right now. Like literally, you should have started at 1 o'clock this morning. Okay. Any final words of wisdom here for our audience? You know, the last one I had on there is if you've got kids, you can actually put them on payroll, and that's a picture of me and my son. My son's on payroll. He works for the firm. He doesn't pay income tax because he makes so little, but it's a deduction to the business. And that is even higher now that you can pay, because that's last year's number. Yeah. So you can pay your kid almost $14,000 tax free every year. That's great. Assuming you follow the rules. So they have to do something. You have to have a job description, but yes, you can put them on payroll. Sean asked for the QR code. It's pennywise.tax/save, or there's the QR code, or message us or reach out through Brian. Brian's been really accommodating of us. And definitely wants to see you guys succeed, because honestly, the more money you save on your taxes and the better you document your expenses, the more money you have to grow your businesses. Thank you very much. Good stuff. Absolutely. All right. So you've seen it all, right? People have been coming to you all these years. Jackie, you've seen plenty of businesses, and Adam, you're on the attorney side. Just quickly, some final words of wisdom from both of you to help us. We're at all different stages of our idea. Some of us are just starting off. Some of us are in the middle. Some of us are building our business, and we are getting into a little bit heavier of thinking about how we're going to deduct things and what's important to file and not file. So quickly, some words of wisdom. We'd greatly appreciate it. And all the information you provided is amazing. In the app, there's people that are replying and responding, and in multiple social media channels. I know you see some of them on here, but thank you for what you do. Yep. Yeah, good stuff. Yeah. Quickly, some final words of wisdom. So my Jackie's, I might take her, so I want to go first. I call it stepping on the scale. Know your numbers. Once a month, sit down and look at how last month went. Even if you aren't generating revenue, at least have an idea of the amount that you're spending and what your expenses are. So step on the scale and know your numbers. And then my second one is hire experts, because you can move so much faster. But they know that because they're working with you. Thank you. And Jackie? Yeah, I would hire experts, and I'd echo everything that Adam said. But I also would tell you not to get comfortable. As you're growing, start
like being curious about what you should be doing next. It's not, don't set it and forget it. And also just ask the question, is there a way that this could be deductible or not? And if you are choosing the deduction, make sure that you can support it, or, look for opportunities for credits too, because they're out there.
Thank you so much. We have the QR code. We're going to have the information in the archives here with your information. So thank you for both joining us on National Inventor Club. This is tremendous. And I appreciate you also taking the time the day after tax season. I know you're not even home right now, Jackie. You're on the road filing and whatever you have to do, and you stopped to be able to give this information provided to us, National Inventor Club. And Adam is taking care of everything at home. Trust me, he's got it. So thank you. I'll leave that between both of you, but we appreciate it, and we will keep in touch. And thank you again.
Thank you.
Thank you.
Thank you. All right. That was really interesting. Wow. We just extended tax day by almost 2 days on National Inventor Club. Unbelievable information from corporations to how to file and what to file and what's a write-off and what's not. This is what we're talking about. This is the information that we bring on National Inventor Club for you, no matter what stage your invention is in. Thank you, everybody. Keep moving your ideas forward from National Inventor Club. Thank you. We'll see you again soon.